Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 11th of November and our Asian Midday Market Watch is powered by the Smart Investor Singapore. We have our guest today, Tina Teng, Markets Analyst, CMC Markets Asia Pacific and Canada, coming out to us out of Auckland, New Zealand. Now, Tina, great to have you on the show.
Hi, Brian. Thank you for having me again.
Now, Tina, before we get your insights, let's take a look and see how stock markets are performing, but also how crypto markets, which have been taking a bloodbath, have been performing as well. We've got Bitcoin, which is up to 17,051. It's up 3.39%. Ethereum is at 1,233.9. It's up 4.9%. Now, across the regional equity markets, we've got the Singapore Straits Times Index, which is up a whopping 1.52%. The KLCI out of Malaysia is up 0.99%. Shanghai is up 1.46%. The ASX All Ordinaries is up 2.78%. The Nikkei is up 2.85%. The Hang Seng is up a whopping 5.54%. And rounding up the numbers, we've got the Kospi, which is also up a whopping 3.04%. Now, Tina, what's your view on this superb market performance this morning?
Overnight, the U.S. printed cooler than expected U.S. inflation data. Hello?
Yes, go ahead.
Yeah. So the cooler than expected inflation has boosted the risk sentiment, sent the bond yields down. US dollar sharply declined. ECB data came as 7.7%, well below the expectation of 8%, and also a sharp decline from 8.2% in September. Actually, it was the fourth consecutive decline from the peak in, I remember it's in May. So I think it just suggests that the Fed's aggressive rate hikes have worked, and now investors are betting for a softer tone from the Fed, and the markets are pricing for 50 basis points rate hike in December. That's a turning point of the Fed rate hike cycle.
Now, Tina, how much of this has also to do with the fact that the midterms elections in the US have also not gone as badly for the Democrats as previously thought?
I think no matter what, I think Republican probably would have control of the House. That would be like split US government administration. That also means the Democrat can't really make their own decision for the whole fiscal policy. That's a positive signal to the U.S. economy, which means the government couldn't expand the spending and potentially would drive down the markets, the risk markets, and boost the equity market and other risk assets.
Now, then, how does this then had an impact on the US dollar, which is probably had a little bit of a pullback?
The US dollar declined mainly because of the downturn of the bond yield or the risk markets. What we can see now, because markets are pricing for slow down in the rate hikes, now the bond yields have declined sharply. That's, I think, the primary factor that pushed down the US dollar.
Now, looking ahead then, Tina, what are some of the risks that we should be watching out in the markets today?
I think because that's a huge rebound in the US equity markets, as well as other regional markets as well. I think traders need to be aware that there might be a profit-taking action today. So near-term pullback might be in the case. However, I think as long as the bond yield continue declining, they will further support this rebounding frenzy in the equity markets and other risk assets like US dollars downturn may continue to drive up the other currencies, especially commodity currencies like Australian dollar or New Zealand dollar, Canadian dollar. And also we can see the Japanese yen has really rebounded against US dollar. That's the very direct correlation with the US bond yields decline.
Tina, as always, thank you very much for your insights and thanks for coming on the show.
Thank you.
Now, we've been speaking to Tina Teng, Markets Analyst at CMC Markets, on BizTech's Asia Midday Market Watch, powered by the Smart Investor Singapore. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.